Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. All necessary measures. The yen extends gains after Japan's Prime Minister says the government stands ready to stop the currency slide, with signs of possible backing from the United States. Gold, meanwhile, breaks above the $5,000 an ounce level for the first time as geopolitical uncertainty fuels investor flight from sovereign bonds and the dollar. Plus, Democrats threaten to block a spending package amid escalating tensions over an immigration crackdown in Minnesota, risking a partial US government shutdown later this week. Happy Monday. Welcome to a new week. Last week was dominated by geopolitics and Japan, and once again, Japan is our top story this morning. We've got the Bloomberg Dollar Spot Index sliding to its lowest level since September. This is thanks to the warning from Prime Minister Takaichi and the signals of potential US involvement. On the flip side, the yen is up more than 1% against the dollar at this point. 154 per dollar is where we are right now. Gold, as you can see, past that $5,000 an ounce level for the first time on the haven demand. And can you feel that chill in these markets? I'm not talking about the weather. Look at S&P futures, down once again. We've had back-to-back losses for the first time since June for the S&P. But this morning, futures on both sides of the Atlantic pointing lower, a sign of that market volatility in the run-up to the Fed decision. Speaking of which, let's take you to the risk events on the docket for the week. We've got that Fed decision coming on Wednesday. A hold is what's expected in defiance of President Trump's pressure for rate cuts. But do we see dissent from Waller and Bowman? We've also on Wednesday got three of the Mag 7 reporting earnings. On this side of the Atlantic, we keep an eye on ASML when it comes to big tech. And then on Friday, the first glimpse of fourth quarter Eurozone growth data. All economists we surveyed expecting expansion, so we keep an eye on that. We've already got earnings breaking on the terminal from Ryanair, so let's take you to those as well. This, of course, is Europe's biggest airline group. Elon Musk would like to get a piece of this, but their earnings for the quarter, they see full-year profit after tax pre-exceptional to 2.13 billion euros to 2.23 billion euros. Their third quarter revenue coming in at 3.21 billion euros, beating the estimate of 3.18 billion euros. We'll be speaking about these results and the Musk intervention with the Ryanair CFO Neil Sorahan. That conversation coming in just about 10 minutes' time. So don't go anywhere. It's going to be a busy day and a busy week. Let's set you up for the day ahead. A very good morning. We have the yen strengthening as traders remain on alert for market intervention as Prime Minister Sanai Takaichi warns markets and the US signals that it may join Japan to help defend the currency. Let's go straight to Asia. We can get more now with Winnie Xu in Hong Kong. Winnie, what are you watching where you are?
Yeah, morning, Lizzie. Like you mentioned, we are seeing the yen extending gains with these intervention risks now that Takaichi reiterated that the government is ready to take action if they see any of these speculative move. And hence, you're seeing that the Japanese yen now hovering around that 154 against the dollar, which is about its strongest level since November. And that strong yen is pressuring Japanese stocks, specifically for the topics here, down about 2% with losses led by exporters such as Toyota Motor. Now, you flip the board and take a look at how that weaker dollar is actually affecting our overall Asia markets. It's actually providing some support for the MSCI Asia here, as well as the Bloomberg Asia Dollar Index, both up about 0.5%. And the gains in these Asian currencies led by the South Korean won, which is strengthening about 1.6% here. And also with this weaker dollar trend, that's also affecting key sectors in our region as you flip the board and take a look at the mining sector. So you are talking about, for example, the MSCI Asia materials sector up 1.4%, and that is taking it to its highest level since 2021. And for example, Korea zinc here up some 15%. Yes, it's coming on the back of that weaker dollar, but also, as you mentioned earlier, the surge in precious metals, including gold, silver, and that ongoing debasement trade away from U.S. assets. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Su in Hong Kong. Well, let's dive deeper into that theme. The dollar weakening, as she says, against most major peers, including the euro, as investors debate how potential US involvement in forex intervention in Japan might worsen sentiment towards the world's reserve currency. Let's go to Bloomberg Live strategist Mark Cranfield for more now. Mark, the yen's continued to drop today. Why might this time be different?
This is all about US Treasuries. Although we're talking about the yen and a significant move, which is likely to continue as well because everything is falling into place for it, it's really about the US interest in the whole situation. So in the past 2 decades, it's been extremely rare for the United States authorities to get involved in any kind of intervention, even just checking on rates as they did on Friday in the past couple of decades. Now, the reason why this time the motivation is much stronger for the United States is the read across between the yen to Japanese bonds to US Treasuries. So clearly what has unnerved the American authorities is that the yen has become unruly. It's been weakening almost in a vacuum. That's been helping to propel more weakness in the Japanese bond market, which was the big story last week, and that was spilling over to hurt US Treasuries. Now, the thing more than anything else that the US administration doesn't want to see is higher US Treasury yields. And if JGBs are pushing US Treasury yields higher, one of the ways they can help to stop that is by putting a cap on the yen. You support the yen, you support JGBs, in turn you provide a read across to US Treasuries. That is the sequence of events that happened. That's why the US is suddenly very concerned about yen weakness. We probably haven't heard the end of it. One round of rate checks is probably not going to be enough. This is a huge market. Positioning was enormous. Some of the biggest yen short positions we've seen in the last 5 years. It will take quite a long time to turn it around. But a lot of people are looking at this and saying this is a turning point, and with a little bit more help, we are probably going to see the change in direction of the yen, which began last Friday.
Yeah, the administration might not want higher Treasury yields. They might want a weaker dollar, indeed. Mark, let's also turn to gold because, of course, it's marching higher. It's past that $5,000 an ounce level already. There are some key levels to watch on lots of assets this week, but what could bring gold down?
I think you're getting a period here of a kind of euphoria that we've seen in some other places as well. We've had people talk about an AI bubble. We seem to have a precious metal bubble going on right now as well. And on several measures, it's really getting quite extreme. So if you look at the divergence that it has from its moving averages, a lot of people will look at the 200-day moving average as being a reasonable indicator of where the price of an asset should be. Both gold and silver have diverged enormously from where their 200-day moving averages are. If you look at silver, in the past 1 year, it's almost quadrupled in price. The speed with which gold has gone from 3,000 to 4,000 to 5,000 is getting quicker all the time. Clearly, there's a build-up of positioning. Speculation is extremely high. And as our colleague Ven Ram from Dubai was saying, implied volatility has gone off the charts. It's the highest we've seen for many years. All of those are warning signals. The market is extremely speculative. What it may need is for something else to crack first, and then that will feed back into the precious metals. So if we do see more downside on dollar yen, the losses that people will start making there, they'll probably have to start cutting positions in other places, which could be things like Korean equities, which have had a great run, and probably precious metals as well. So one will probably feed into another. The yen could be the starting point for a reversal in several assets. Let's see how much further it goes. But below 150 for dollar yen could be a warning across all asset markets.
OK, we'll keep an eye out for that domino effect. Mark Cranfield, thank you so much, our MLive strategist there. Well, turning to the US, it's edging closer to the risk of partial government shutdown as Senate Democrats vow to block a giant spending package unless Republicans strip funding from the Department of Homeland Security. Senate Republicans plan to reject the demands despite escalating tensions after a border patrol agent was fatally shot a man in Minneapolis.
President Trump, you can end this today. Pull these folks back. Do humane, focused, effective immigration control. You've got the support of all of us to do that. Let our law enforcement continue to do what they do, making Minnesota one of the safest states in the country, one of the best places to live.
Let's bring in Bloomberg's John Herskovits for more now. John, what's the latest on the Democrats' plans for a shutdown, and what are the chances of it happening?
Sure. We have Senate Democratic leader Chuck Schumer and other key Democrats saying that they're going to block a spending package unless Department of Homeland Security funding is stripped out of it. The parts of this package include defense, labor, State Department, and other departments as well. So they're drawing in their heels. They really want to see how the U.S. is funding the Department of Homeland Security, which oversees ICE, how they operate in the wake of the shooting, which has just sparked outrage. The spending package has already passed the House, and the House is not in session. So if in order to strip out DHS funding, it would also require a vote of the House, and there's no plan now for the House to come back. Republicans say they don't intend to strip out DHS funding. So we've all seen these shutdowns before. At this point, a few days out, it looks bleak. There's no terms of a deal yet. But as the deadline gets near, we often see some sort of maneuvering towards a deal. At this point, we don't see that in operation yet. So we have the Democrats and Republicans drawing their lines, and they're still far apart on this issue.
OK, so that on the risk of a shutdown. But, John, are we seeing any pushback from Republicans on the actions of those federal agents in Minnesota? And what's President Trump been saying about this most recent fatal shooting?
Sure, we've seen some pushback, but it's limited, and it's not of the scale that would follow the Democrats' demand of stripping out DHS funding from the bill. We've seen some Republicans looking for investigations, transparency, trying to get a better understanding of what went on with the latest fatal shooting in Minneapolis. But we're not seeing any movement towards totally revisiting how DHS is funded. Donald Trump as well has shown no indication that he wants to see any change on DHS. He has thrown his support behind it. He's blamed Democrats for what's been going on in Minnesota. He has said that that there will be an end to this. He sees it coming at some point, but at this point, he has also dug in his heels and has shown very much support for his administration and how DHS and ICE have been functioning in the city.
John, thanks for the update. That's Bloomberg's John Herskovits. Well, still ahead on Bloomberg Daybreak Europe, it's a big week for the British Prime Minister as he heads to Beijing, hoping to reinvigorate trade ties with China. We'll discuss that with our guest at 6:30 a.m. London time. But coming up next, Europe's biggest budget airline and Europe's biggest airline group, indeed, raises its full-year guidance for passenger growth and fares. We're going to be speaking to the Ryanair CFO, Neil Sorahan. That conversation next. This is Bloomberg. Good morning. Ryanair has lifted its outlook for passenger growth and fares. Europe's biggest budget airline touting improved Boeing aircraft deliveries and strengthened travel demand as it releases its third-quarter earnings. I'm pleased to say we're joined now by Neil Sorahan, CFO of Ryanair. Good to have you with us,
Lizzie,
Neil.
how are you doing?
It seems like it's been a good quarter.
Hasn't been bad. Traffic up 6% to 47.5 million passengers, at 4% higher fares. And as CFO, very pleased that unit costs are flat on a per-passenger basis. So, yeah, a pretty good quarter.
But your shares were up about 55%, I think, last year. How are you going to keep that momentum going?
We'll continue to deliver on the growth within the business. We've already raised our traffic targets for the current financial year from 207 to 208 million passengers. And then as we get into next year, we'll start a decade of growth to 300 million passengers. We'll start to see the MAX 10 aircraft coming in in the spring of 2027, and that'll enable us to grow the fleet to over 800 aircraft, 300 million passengers per annum, while keeping a very close eye on the costs. I mean, as we look into next year, we're 80% hedged on our fuel bill at 10% lower levels than we were in the current financial year. So again, locking in good savings as we look into next year. Growing traffic to 216 million passengers next year, which is about 1 million ahead of our previous targets. So I think the key to delivering for the shareholders is that we'll continue to have a very strong balance sheet. We'll continue to grow the business. We'll continue to have share buybacks and dividends within the business. I think that's indicated as well in our total shareholder return over the past 3 years has been in excess of 150%, which puts us very clearly in the upper echelons, the upper quartile of the Euro Stoxx 600 index.
Yeah, you mentioned deliveries. Given Boeing's ongoing travails, some have asked whether your loyalty to Boeing is warranted, but this seems to pour a bit of cold water on that. Absolutely no delays expected.
No, in fairness, Stephanie Pope, Kelly Ortberg, they've done a great job over the past 18 months. They've totally turned the corner. 206 of the game changers in our fleet already. We'll get another 4 in February. So that's enabled us to increase our traffic targets into next year. And then Boeing have increasing confidence that they're going to get the MAX 10 certified in the summer of this year, probably calendar Q3, so that's the July, August, September time frame. And that gives us good confidence that we'll get our first 15 of these wonderful aircraft. So 20% more fuel efficient, 20% more seats, that we'll get the first of these aircraft in the spring of 2027. So 15 ahead of the summer of 2027.
And are there particular consumer trends in Europe that you've spotted or would flag for 2026?
No, consumers continuing to be very keen to get out and about. We've had our best 2 booking weeks ever over the past couple of weeks, so no shortage of demand. Continue to want to get to the sun, the likes of the Algarve, Spain, Portugal, down into Greece. Lots of wonderful places. You should be booking your holiday now, Lizzie.
Well, you talk about fuel efficiency. I've got to ask you about this spat between your CEO, Michael O'Leary, and Elon Musk. They've been beefing online, obviously. And
it's been great fun. It's been good for bookings. I think it was something that kind of fell in our lap, and that we were able to, I suppose, have a bit of fun out of. But, it's pretty much behind us at this point in time.
Well, for anyone who lives under a rock, of course, what happened was that Michael O'Leary said he wouldn't be installing Starlink to provide Wi-Fi on the planes because of the fuel inefficiency, and Musk then threatening to buy the airline even though he can't because he's not an EU national. But do let me ask you seriously, has Musk or Starlink been in touch with Ryanair since that scrap?
No, I mean, we've been, as I said, having good marketing out of it. It's 2 big idiots having a bit of fun with each other.
Are they planning to meet and talk?
Look, no, I mean, we're in a situation now where we're putting Scimitar winglets on our aircraft to reduce the fuel burn for 1.5%. At this point in time, we'd have to put an antenna on the aircraft, which would have about a 2% fuel drag. So when we get to a stage where the fuel drag is gone and the product makes sense from that perspective, of course we'd love to have Wi-Fi on board the aircraft, but it's just not there yet.
Well, yeah, when do you expect to have a decision on in-flight Wi-Fi?
I've been looking at this for the 23 years I've been in Ryanair. It's getting better and better every year, but it's just not there yet.
But what if Musk tries to prove a point and he gives one of your rivals, let's say EasyJet or Wizz Air, a cheaper deal just to show that, customers expect Wi-Fi, free Wi-Fi on low-cost airlines? The
reality is they don't. I mean, the vast majority of our customers come on board the aircraft with their movies or whatever downloaded onto their iPads. It's the average sector length within Ryanair is 2 hours. People don't need it. They won't pay for it. And if there's a 2% fuel drag, we're just not there. If our competitors get it, well, I mean, our competitors are already about 80% higher costs than Ryanair, so it's not going to make much of a difference. And I doubt they'll be running to smaller competitors purely because of Wi-Fi when they can get a fare of €44 at Ryanair.
So if the price is right, would you do a deal with Musk?
If the price is right, we'll do a deal with anybody.
Well, some would ask, has it all just been a publicity stunt? You say it's been good for sales.
It's been good fun. It's been good fun.
but not a publicity stunt. Look, I've got to ask you as well about this storm that's been taking over the US. And I know you don't have flights to the US, but is there going to be knock-on effects for Europe and Ryanair?
No, we would have no expectations of any knock-on from the US storm unless it happens to blow across the Atlantic and hit us here. As normal, we've been dealing with winter conditions in Europe, lots of de-icing, but customers getting to where they want to go, over 90% on-time performance last night.
OK. Phew. Good to hear. Neil, thank you so much for coming into the studio.
Thanks,
Off
Lizzie.
the back
Pleasure.
of those results, that's the Ryanair CFO, Neil Sorahan.
Thank you.
Coming up, US natural gas prices surge after that freezing weather stateside sweeps across much of the country. We'll bring more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other top stories we're following for you this morning. A massive winter storm hit the US Atlantic coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. Parts of Texas and the Mid-South were coated in freezing rain, enough to take down power lines. More than 1 million homes and businesses across the US lost electricity, mostly in Tennessee, Mississippi and Louisiana. The storm has also forced more than 17,000 flight cancellations so far. Meanwhile, the cleanup is already underway in New York City.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Meanwhile, US natural gas prices soared above $6 for the first time since 2022 due to the freezing weather, and futures surging in early Asia trading. That follows a 70% rally last week, the biggest weekly advance in records going back to 1990. Elsewhere, Ukrainian President Volodymyr Zelensky says that progress has been made during talks aimed at ironing out the possible parameters for ending Russia's war. Zelensky was speaking after delegations, including military officials from Ukraine, Russia and the US, took part in 2 days of talks in Abu Dhabi. Bloomberg understands that all parties agreed to meet again next Sunday to continue negotiations. Elsewhere, China is investigating its #1 general and Politburo member Zhang Yuxia under suspicion of serious discipline and law violations. Another member of the commission is also being investigated. The probes will shrink the Central Military Commission to just 2 people, Xi and his deputy. They mark China's widest purge of generals since Mao Zedong's rule ended in 1976. And India's federal cabinet has reportedly approved some parts of the proposed agreements, including security and defence, under the India-European Union trade deal framework. That's according to the Business Standard, and it comes as European Commission President Ursula von der Leyen and European Council President Antonio Costa arrived in India today and expected to hold talks tomorrow to advance negotiations. And finally, renowned free solo climber Alex Honnold has scaled one of the world's tallest buildings in a daring feat streamed live on Netflix. I cannot look. The 40-year-old climbed the 508-metre-tall Taipei 101 building with no ropes or safety harness, completing the feat in 95 minutes. Honnold became a household name after his rope-free climb of Yosemite's El Capitan, captured in the Oscar-winning documentary Free Solo. Do not try this at home, kids. Well, coming up on Daybreak Europe, how safe is the British Prime Minister's leadership now that his biggest potential challenger is barred from contesting a seat in Parliament? We'll dive deeper into British politics next, so stay with us. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. All necessary measures. The yen extends gains after Japan's Prime Minister says the government stands ready to stop the currency's slide, with signs of possible backing from the United States. Meanwhile, gold breaks above $5,000 an ounce for the first time as geopolitical uncertainty fuels investor flight from sovereign bonds and the dollar. Plus, Democrats threaten to block a spending package amid escalating tensions over an immigration crackdown in Minnesota, risking a partial US government shutdown later on this week. If you're just joining us, it's 6:30 a.m. here in London. Welcome to Daybreak Europe. The markets picture looks like this. Focus once again on the yen. It was a theme of last week, and we have the yen stronger against the dollar by nearly 1%. On the flip side, the Bloomberg Dollar Spot Index at its lowest since September. The euro is just one of the currencies benefiting on the flip side. This on Takaichi's warning and signals of a US involvement. But take a look at gold as well, past that $5,000 an ounce level for the first time on the haven demand. And take a look at the futures picture. Futures lower on both sides of the Atlantic, just a touch here in Europe, but the S&P 500 posting its first back-to-back weekly losses last week since June. Could this week be the one for the hat-trick? In terms of the front pages this morning, let's take a look at those as well. The Financial Times splashing on the mounting backlash against President Trump's immigration crackdown after federal agents killed a second person in Minneapolis. Some Republicans breaking ranks and Democrats threatening a government shutdown. Then let's flip over to the Wall Street Journal. They've got the president saying that the administration's reviewing everything about that shooting. The paper reporting that Trump did not answer directly when asked twice whether the officer who shot Alex Pretty had done the right thing. And then if we flip over to the UK as well, if we look at The Guardian, they've got the governing Labour Party in turmoil after the Mayor of Greater Manchester, Andy Burnham, was blocked from returning to Parliament to stave off a potential leadership challenge. Will Gilt get a boost at the Open, we ask, given how unnerved they were by him last week? But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, of course, Terminal subscribers can find by going to DAYB Go. Well, let's dive into that UK political story. The British Prime Minister Keir Starmer and his Labour Party allies having voted against allowing Andy Burnham, the Mayor of Greater Manchester, to run as an MP. He's widely seen as a potential leadership challenger to the PM if he should return to Westminster. So let's get more now with Bloomberg's James Woolcock. James, how much has this episode weakened Starmer and left him vulnerable ultimately to another leadership challenge? Good morning.
Morning. I'm not convinced it has weakened him yet. I think if it's going to, the weakening starts today. So what we're seeing here, for the viewers who are off for the weekend, is Labour's most popular politician vetoed from running to be an MP by Labour's government's Prime Minister and the Executive Board who run the Labour Party. It's not unheard of, and Starmer allies were telling me just over the weekend that the cost of an election to run Manchester's Greater Manchester area would be £4 million, which for the Labour Party is not cheap. And so they have an argument to make. And people, even who don't back Starmer, thought it was quite cynical of Andy Burnham to run. The reason why I say the weakening is yet to come is what happened over the weekend was the Deputy Leader, Lucy Powell, the former Deputy Leader, Angela Rayner, Wes Streeting, the leadership rival himself, and a number of other Cabinet Ministers said Burnham should run. And so Starmer has given an opening for all the many people who might dislike him and his government to now come out and say why they disagree with him. That is the real weakness, and that we are yet to see.
OK, so the floodgates are open. Of course, we saw Gilt, as I say, unnerved last week by the man who said that we shouldn't be unhocked to the bond market. Are we going to see the opposite reaction today?
Well, so they paired a lot of that move on Friday. So what's shocking to me is the idea that bond traders even knew who Andrew Gwynn, the Labour MP who stepped down, even was. That speaks to me of there is a real fragility in the UK gilt market, the idea that a small by-election would cause moves of this extent. And if you look at May, the local election date we're all concerned about, there are high volatility bets being placed on the pound that expire in late May and early June. And so the danger, as it seems for the markets, I think, is still in the local election period, if you just look at where hedge funds are placing their bets. What remains to be seen, though, is quite why they are so concerned about where the UK could go going forward. I think it speaks to a kind of broader macro volatility about sovereign debt at this moment.
OK, James Wilcock, thank you so much for that look ahead. Well, there'll be even further pressure on Keir Starmer this week as he looks to reinvigorate recently strained business ties with China during his visit to Beijing. I'm pleased to say joining me now is Ali Renison, Director at SEC Newgate and former advisor to the UK Business and Trade Secretary. Morning, Ali. Talk us through how Prime Minister Starmer should be approaching this visit to China this week. Should he be taking inspiration from Mark Carney, cutting tariffs and trying to cosy up to Beijing, or would that just invite retaliation from Washington?
Morning. Yeah, I think that there is an interesting triangulation at play that certainly Keir Starmer is trying to have to manage, and I think that there's probably a good reason why this trip is really focused more on services, sort of trade and investment, particularly on financial services, which is obviously a sort of UK powerhouse export sort of capacity potential. Because I think if you start getting into talking about trade and goods, that's the stuff that gets really sensitive in terms of where the US has a perspective.
But do you think that Starmer will pivot towards China and indeed the EU and away from the United States, given how much President Trump underscored the unpredictability around his administration last week?
I think it's part of a package. I think it's part of a trend towards diversification that we're seeing from the UK, from Canada, from basically all major US trading partners, and sort of trying to reduce their complete dependence and reliance on the US market. But I don't think it's necessarily a pivot, nor it should be, because as we've seen that sometimes over-relying on China can bring its own risk. They are just as capable of leveraging and even weaponizing access to their market as the US is when it comes to geopolitical relations.
But how damaged is a special relationship, Ali?
I think the special relationship has always transcended individuals. I certainly think that President Trump walking back some of his comments in respect to the UK on kind of the contribution of NATO troops to the previous sort of conflict in Afghanistan probably was a good thing to do. But I think ultimately this relationship is going to endure far, far longer. I do think, though, that there is a risk that the government needs to be mindful of, and that, you know, even though we have this sort of nascent trade deal between the US and the UK going on, President Trump was very willing to threaten tariffs elsewhere. So it doesn't mean that, you know, just because you have a deal or are building towards a deal that you're immune from kind of other tariff threats.
I mean, I mentioned Carney. What do you make of his idea of the quote-unquote middle powers joining up to take on the United States?
Yeah, I think his speech was sort of in Davos, talked a lot about obviously taking the world as it is, not as we want it to be. But then there wasn't a huge amount of prescription for what that action should look like. Does that mean that you're sort of ganging up at the WTO to sort of file suits against the US? Doesn't really care about the WTO at the moment. Does it look like doing a lot of trade deals with one another? Does it look like sort of badging together on foreign policy? We don't really know what that is. Keep in mind the UK was doing trade talks on an upgraded deal with Canada and then sort of broke them off before the election. We don't see those sort of being resurrected. Hopefully, I think the UK government is looking at sort of trying to do its own trade deals with other trading partners as part of this diversification and badging together effort.
Well, yeah, do you see the EU leaning towards China and indeed India? Because we've got Ursula von der Leyen in New Delhi this week.
Absolutely. You know, it's interesting that the EU and India have actually been negotiating a trade deal since about 2008 with sort of varied progress. The UK, we got ours done. I think this is very much about the EU also with an eye on China, because I don't think the EU has a sort of a coherent policy as yet in terms of how it deals with China. Part of it wants to sort of be more offsetting. Part of it wants to still engage with it. We saw Emmanuel Macron's comments during Davos saying that we needed to have more strategic investment in China. And so I think that the deal with India is about trying to kind of head off, I think, threats in both directions on trade.
Look, Ali, the big thing that we need to talk about is what Trump is going to do next. That's the question every investor is asking. You used to advise the Trade Secretary. What's the top risk that you'd be saying investors and the Trade Secretary should be braced for?
I think not putting their eggs in one basket effectively. I think that Starmer is trying to do a lot of this triangulation, but not to be surprised by anything that the president is going to do. As I say, that, you know, we have this sort of burgeoning trade deal, and yet he was very willing to sort of threaten tariffs elsewhere. And so, you know, I think Starmer needs to try and keep his head down and make sure that he doesn't over-rely on the EU in terms of its pivot. I think the whole focus on the reset was a good idea in practice, but making it a huge, huge deal is not necessarily. We want to try and regularize optimize our trade and cooperation with as many trading partners as possible and not focus on one or the other.
OK, a bit of diversification then when it comes to trade strategy as well. Look, every other day we seem to be waiting for this Supreme Court decision on Trump's IEEPA tariffs, whether or not they'll be deemed unlawful, the expectation being that they will. What should the European response be if these tariffs are deemed unlawful? Is that a kind of opportunity for the UK and the euro area?
I think we've got to keep calm and carry on, because ultimately the Trump administration already has alternative legal bases drafted up if, as expected, the Supreme Court finds the current legal basis to be unlawful. Keep in mind that actually that a lot of the other sectoral tariffs, the national security-based tariffs, for example, on steel and automotives, those stay regardless of what the Supreme Court rules on. And so, you know, I wouldn't necessarily think that it's a good idea to look at this and say we're scot-free, we can renegotiate our trade deal going forward, because I think the administration is prepared to sort of replace the legal basis it currently has with those country-by-country tariffs, and also a lot of the sectoral ones will stay and probably carry on in the future.
OK, yes, because the US Trade Representative Jameson Greer has said that that backup plan will be instigated immediately. So what exactly would that look like for example, the UK?
So we have what's called Section 122 of the Trade Expansion Act in 1974. And basically what that does is it allows for tariffs of up to 15%. Keep in mind that that's lower than some of the baselines for some other countries like China and Canada, for example, but only for 150 days. Otherwise, I think that what the administration is going to do is start looking at Section 301 of the sort of the same legislation, which basically allows for tariffs to be deployed on what they call the basis of unfair trading practices. And that allows you to get into sort of, well, this country levied this barrier against the US, we're going to allow that sort of tariffs on a country-specific basis to carry on. So I think that'll be a sort of an interim solution, looking at sort of investigations to use a different legal basis.
Ali, always a treat getting you on the programme. Love that dog over your shoulder. That's Ali Redison, Director, SEC Newgate and former advisor to the UK Business and Trade Secretary. Well, coming up on Daybreak Europe, we're going to be discussing mounting pressure on the dollar as traders game out US plans for the yen. That and more with Jefferies economist Modupe Adigbembo coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:45 a.m. here in London. And let's get to your top corporate news this morning. The Wall Street Journal reporting that Merck is no longer in discussions to buy biotech Revolution Medicines. Merck had recently been in talks for a deal that could have valued the cancer drug biotech at around $30 billion. The paper reports that talks cooled after the two couldn't come to an agreement on price. Elsewhere, Samsung Electronics is getting close to securing certification from NVIDIA for the latest version of its AI memory chip called HBM4, making progress in narrowing the gap with rival SK Hynix. Bloomberg understands that Samsung has entered the final qualification phase with NVIDIA after supplying its initial samples to the US chipmaker in September and is preparing for mass production of the HBM4 in February. Meanwhile, Volkswagen is reportedly set to pull plans for an Audi plant in the US unless auto tariffs are reduced. Audi's been weighing an American manufacturing site since 2023, initially encouraged by subsidies that would have made such an investment economically viable. That has shifted, of course, as the Trump administration placed tariffs on European car makers. And speaking to Germany's Handelsblatt newspaper, the VW CEO Oliver Bloom said that additional investment cannot be funded unless those levies are cut. Meanwhile, a new report has found living standards here in London have improved at more than double the pace of the rest of the UK. According to the Centre for Cities think tank, real disposable income per person in the capital climbed by 5.8% in the decade to 2023, much faster than the 2.4% rise seen nationally. Well, those are some of our top stories this morning. But let's dive back into the markets now. The prospect of the US joining Japan in foreign exchange intervention is the latest in a series of blows to the dollar that's already under pressure on multiple fronts. Joining me now is Modupe Adigbembo, economist over at Jefferies. Really good to have you with us, Modupe. As I say, we're seeing the dollar weaker against most of its major peers, including the euro, on this prospect of US involvement in yen intervention. I do wonder how much US support for the yen would actually be about protecting Treasuries, and because President Trump might like a weaker dollar. What do you make of these moves? Good morning.
Morning. Thank you for having me. I would definitely say that it's interesting to see that the New York Fed may have conducted a kind of rate check on the yen, so looking like they're ready to potentially intervene in currency markets. And look, even if they haven't, they've had a really big impact on the currency. But it does look to me that the moves here and what potentially the US are trying to do is because of the important spillovers that the yen has, not just, of course, on Japan, but when we think about the fixed income markets, if we think about kind of treasury markets, JGB markets, if you look at the kind of moves we've seen in the long end of the JGB curve, we can now see that on a hedged cost basis, 30-year JGB yields are the most attractive kind of developed market bond yields for Japanese investors. And that's important because Japanese investors are important marginal investors. And if you see more Japanese investors potentially stepping out of treasuries and other developed market bonds, that would have a really important implication on particularly long end yields. And I do think the Treasury are looking with one eye to an understanding that we already have a lot of pressures on the long end from other reasons. And that's another complication they really don't want. So I think they're really looking at the wider spillovers of a kind of weak yen, and part of the intervention I see in that context, definitely.
OK, so potential spillovers for the rest of the world, and especially the US from Japan. What about the spillovers from the US for Europe? Because, of course, we had the president at Davos last week, yes, walking back his tariff threats on those nations opposed to his Greenland plans. But, Modupe, I wonder how much the lingering trade uncertainty is going to weigh on European growth this year.
I do think this kind of uncertainty will have a really large impact because we saw a lot of relief in stocks after Trump kind of walked back his threats. But ultimately, if you think about kind of businesses and all that they have to plan and do, uncertainty is always a really big kind of is a really big impact on their activities. If you're thinking about planning over the long term, you might have a lot more uncertainty around kind of what the relationship with the US will be like, and that will have big impacts. And I think that when you think about where European growth is kind of trending at over the last couple of quarters, you're thinking about growth that's very, very close to zero, a little bit above, a little bit below, but let's say kind of around zero. Those impacts on uncertainty ultimately can have quite a considerable impact on overall growth. So I do think that the lingering uncertainty is a real negative for Europe. But overall, I think the bigger impact would have been if those tariffs, of course, went through. So we're not in the worst case scenario, but still, I don't think everything is as it was kind of before those threats were on the table.
That's really interesting because Christine Lagarde, of course, the ECB president, seemed to say that the impact on inflation wouldn't be massively significant if those tariffs had gone ahead. And Bloomberg Economics actually sees the risks to Eurozone inflation being that it could drop more strongly than the ECB expects over the coming months. It's already below that 2% target. At what point does that become worrying for you?
I do think that there are risks that we see inflation below the ECB's target. And I think that there are many different sources of that. And I think trade is one of them. You can think about kind of increased dumping of products by China as another important factor that could have an impact. But there are lots of different factors, and underlying inflation in the Eurozone is already quite weak. What I would say that for the ECB, and what I think is quite important, is the ECB seems at the moment quite reluctant to talk about potentially lowering rates. Because I think they want to have a decent amount of policy space that allows them to maneuver. But as we kind of go into 2026 and we start to see where inflation will settle at, if we're starting to be well below target, falling towards 1.7, 1.5%, I think these are the sorts of levels that will really worry the ECB. And in the face of inflation remaining well below target, I do think that the ECB would need to lower rates. So in markets, I think there was a period. Sorry, I was just, there was a period where rates were or markets were seeing potential of rate hikes. I don't see that. I think we're more in this world where there might be a potential of rate cuts.
OK, well, just finally, I wanted to ask you about the Bank of England, Modupe, because I was interested to see that you expect the BOE to cut more than the market expects. Do you still think that after those stronger than expected retail sales numbers? And would you still think that if the Fed gathers pace with rate cuts in the back half of the year when Jerome Powell is replaced?
So I think the retail sales numbers and the recent PMIs as well are reflective potentially of maybe upside risks, but I don't yet think they're enough to change the story, because what we're focusing on, of course the activity data is important, but looking at the wage numbers, that's extremely important, and the overall balance of the labour market continues to weaken. So I think that is a key thing that we are looking at, and the fact that over the next couple of months really we're going to see quite a sharp decline in inflation. And I think that there's potentially more to go if you look at the way the labour market looks. I think that the BOE policymakers are keen. They're really, really keen to see wages come down, to see more of an indication that we won't see persistence in the labour market. And I think as soon as they get those signals, they can be ready to do more. And I think more than just that, I think the PMI has been a bit volatile in recent months, so I'm not necessarily ready to put a lot of weight on what we're seeing from the PMI.
OK, Modupe, always good to get you on. That's Jefferies economist Modupe Adigbembo. Thank you. Well, plenty more coming up on Daybreak Europe, so don't go anywhere. This is Bloomberg. Happy Monday. Let's take you through the risk events on the docket for the week. It's going to be a busy one. On Wednesday, we've got a Fed decision. We've also got 3 of the Mag 7 reporting. And on Friday, we get the latest euro area growth data for the 4th quarter. So let's go through those all in charts. First up, the Fed decision on Wednesday. A hold is what is expected, defying really the pressure from President Trump for rate cuts. But do we get dissent from Chris Waller and Mickey Bowman? The data really have dented the case, as you can see, for a rate cut from the Treasuries picture. Then flip the board over, as I say, we get the Mag 7 earnings the same day. And really for investors, the question is, has the investment in artificial intelligence been translating into profits? Does it justify this continued narrow focus on big tech? You can see October 29 was a peak, but they've been lagging. Should we call them the lag 7? Finally, we've got ASML reporting when it comes to big tech in Europe. The upbeat outlook from TSMC boding well for their earnings, and then we get the euro area growth data. There's plenty to look out for this week. They'll take you through all of it on the opening trade up next. Anna, Guy and Tom will take you all the way to the European cash open. Stay with us. This is Bloomberg.